Have you ever contemplated the comparative standing of your finances about the average individual? What is the mean value of retirement savings among individuals? How does your annual income compare to the average income of others? What are your expenditures? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. In numerous nations, a considerable segment of the populace faces the challenge of living from one paycheck to another, grappling with debt, and possessing insufficient savings to address unforeseen circumstances or secure their retirement. Based on data provided by the U.S. Bureau of Labor Statistics, the median weekly earnings, encompassing overtime, commission, and tips of full-time employees, excluding self-employed individuals in the United States, stood at $1,041 during the second quarter of 2022. If this rate were to continue for the year, it would amount to an annual sum of $54,132. The average amount of retirement savings for Americans is about $141,542, according to the How America Saves 2022 report by Vanguard, an investment company that represents over 30 million investors. However, the majority of individuals probably possess significantly lesser amounts. The reported median value of 401k balances stands at a relatively modest $35,345. This implies that exactly 50% of the account balances are below the specified value, while the remaining 50% are above it. Due to the potential influence of outliers on averages, the median account balance is regarded as a more accurate reflection of the typical savings in individuals' 401k accounts. Some don't have any retirement savings. Based on data provided by the Social Security Administration, it has been determined that the mean monthly retirement benefit for recipients of Social Security is currently $1,781.63 as of February. Various factors can influence the average, either increasing or decreasing it. However, the most significant variable that you have the greatest influence over is the age at which you choose to redeem your investment. The collective monthly expenditures of households averaged $5,577, resulting in an annual sum of $66,928. The figure represents an increase of 9.1% compared to the data recorded in 2020. The average monthly expenses for an individual amount to $3,405, resulting in an annual total of $40,859. The average monthly expenses for a family consisting of two individuals amount to $5,782, which translates to an annual expenditure of $69,382. The average monthly expenses for a family consisting of three members amount to $6,597, which translates to an annual expenditure of $79,163. The average monthly expenses for a family of four amount to $7,749, which translates to an annual expenditure of $92,989. The average monthly expenses for a family consisting of five or more members amount to $7,400, which translates to an annual expenditure of $88,797. It is worth noting that the Bureau of Labor Statistics has observed that a family consisting of 5 members tends to have lower monthly expenses compared to a family comprising 4 members. The nature of statistical estimates is characterized by certain inherent qualities. The nature of statistical estimates is characterized by certain inherent qualities. Credit scores exhibit a significant range, spanning from a minimum of 300 to a maximum of 850. Notably, the average FISCO score, according to Experian, is at a startlingly high level of 715. Despite the existence of individuals who downplay the importance of maintaining a favorable credit score, it remains a crucial aspect of financial well-being. A significant number of individuals can derive substantial advantages from possessing a respectable quantity. If one intends to utilize any form of debt, it is imperative to pay close attention to one's credit score. The credit score of an individual has a significant influence on the mortgage rate they are eligible for when purchasing a home or rental property, as well as the terms they are offered for a car loan and other types of potentially low-interest debt. Recent reports indicate that the average credit card debt in the United States stands at approximately $5,733. The amount of credit card debt is subject to variation across different age groups. As individuals progress through life, there is a discernible trend toward accumulating higher levels of debt, which subsequently diminishes as they approach retirement age. When credit cards are used responsibly, they can offer advantages in terms of facilitating the purchase of goods and establishing a positive financial track record. One of the challenges associated with carrying credit card debt is the exorbitantly high interest rates. If an individual is burdened with credit card debt that incurs interest rates of 15%, 20%, or 25%, which significantly surpass the typical returns earned from stock market investment, this situation effectively undermines any efforts made towards retirement investing. One query that frequently arises among individuals pertains to the potential correlation between credit card usage and increased expenditure. One may inadvertently develop the perception that the funds being utilized through credit card transactions do not represent tangible currency, thereby leading to a self-convincing mindset. From a technical standpoint, that assertion is accurate. According to Michelle Kagan, a certified public accountant and author of the book Debt 101, it can be argued that when individuals incur expenses, they are essentially borrowing money rather than truly spending it. It is a well-known fact that the obligation to settle the bill will inevitably arise. However, the allure of modest minimum payments can create the illusion of advantageous purchases. Unless the purchase is promptly repaid, the financial burden of the bill will not be experienced for approximately 1 month. To mitigate the risk of overspending or incurring substantial debt through credit card usage, it is imperative to cultivate sound financial practices. Establishing a budget is a crucial step in financial planning. It is essential to establish monthly spending limits and ensure that one can feasibly settle their credit card balance in its entirety every month. It is imperative to diligently monitor and record your expenditures. It is advisable to maintain a record of your credit card transactions and engage in regular reviews of your statements to gain insight into your spending habits. It is advisable to refrain from engaging in impulse purchases and instead allocate sufficient time for contemplation before making impulsive buying decisions. It is advisable to evaluate the necessity of the purchase and its compatibility with your budgetary constraints. Punctual payment. To prevent incurring late fees and interest charges, it is imperative to ensure timely payment of your credit card bills. It is advisable to regularly monitor your credit card utilization. To maintain a favorable credit score, it is advisable to ensure that your credit card balances remain relatively low in proportion to your credit limit. Ideally, it is recommended to keep these balances below 30%. The personal saving rate in the United States refers to the proportion of personal savings concerning disposable personal income. In essence, it refers to the proportion of individuals' earnings that remain after the deduction of taxes and expenditures. Despite successfully allocating funds towards short-term and medium-term savings goals, there remains a limited amount available for retirement planning, particularly when considering that the average down payment for a specific item is $100. Experts recommend that individuals allocate a minimum of 10 to 15% of their income exclusively for retirement savings, and even more if the objective is to retire at an early age. Gaining a comprehensive understanding of one's financial situation can be challenging, often leading to a sense of being far from the desired financial position and making minimal progress. However, it is my aspiration that this video will provide valuable assistance and offer insights to enhance your financial well-being. Well then, that's a wrap. We hope you enjoyed this video, and as always, thank you for watching. If you like this video, please don't forget to give a thumbs up, comment, and hit that notification bell so you don't miss out on our following videos.